Hi guys, welcome back to the artoftrading.net. This is Trader Stewie here giving you guys another video. I just want to do a video today about a question that I got today from an auto trading member and who asks a very good question. He asked a question about, when is a good time to set uh, like buy stops or buy limits, because obviously a lot of people who trade, they don't trade full time, not many people can trade full time, and obviously, they have day jobs. So, what's the best way to go ahead and, try to maybe take advantage of a good setup that maybe you're watching, or maybe something that pops up in an alert service that you subscribe to, like if you get like a few good setups, like how do you know when to buy them if you're busy at work? Would a buy limit work? Would a buy stop work? Like what would be a good way to participate in trades like this if you're, if you have, other obligations, while during the trading session. So I mean, here's I thought I would answer this question, by giving like my preferences. Obviously every trader is gonna have a different answer for this, but this is mine. For me, I trade full time, so I rarely ever use buy limit orders. Because I'm in front of my computers the whole time. I set my alerts, and when my alerts trigger, on certain stocks or certain setups that I'm watching, when certain prices trigger, I'll automatically get notified, from my broker, from my brokerage account. I'll get these email alerts that tell me, hey, the stock has touched a certain price, and right away, quickly, I'll take a look at the stock and decide later, if market conditions warrant an entry in the stock, if the volume is good for me to enter into the stock, if the action overall in this stock is healthy enough, is it a stock worth looking at, worth getting into, and if the price did trigger, where would be a good stop? Where would be a good stop loss? Did the stock run up too much for me to put a stop loss in it now? Or what I mean? Like, so all these things have to come in, into the equation for you to come up with a good strategy into entering a trade. So just because a price triggers does not mean that you automatically have to buy it. That's too easy. That's not how it works. Once the price triggers, then you have all different parts of the equation that have to come in before you decide, hey, is the stock worth me getting into right now? So today, I had a fellow member, his name is Nate, who set his buy limits in a couple of stocks, and he got triggered automatically right after the open. Next thing you know, the stocks broke out above above the entry points, above the trigger points, and then they collapsed right away. Okay, now what did Nate do wrong in this example, in today's example? Well, I can tell you two things right away what he did wrong. I can tell without even looking at his stocks, I can tell you what he did wrong. Okay, A, he put in his buy limit orders in the pre-market. Okay, that's one thing I will always tell subscribers: never ever put buy limits in the pre-market order. Never do that, especially for stocks that are thinly traded. Because at that point and near the open, there's all kind of games being played. You have a lot of overnight money that's moving around. You have market makers trying to gap up stocks, trying to gap them down, trying to shoot for stop losses. So you want to always let the first 30 minutes to an hour cool off and go away. Then once the dust has settled after the first hour or so, maybe 30 minutes, 1 hour, then you can start looking for stocks and see how they're behaving. For example, I'll give you a perfect example here today. The stock is OPK is a symbol. This was a perfect example of a stock, of why to never put a buy limit order right after the open. You never want to do that, or right before the open, or immediately after the open, because I mean, like I said, stocks, they'll gap up, they'll gap down, they'll overshoot. So you want to be careful. So here's a stock example. If Here's a stock that I was looking at today, and I called it out in the chat room with many other traders who played in it as well too today. Basically, it's a stock, as you can see here, over the last 2 3 days. It's been kind of like forming. It's been kind of forming. It's been rallying for the last few days, for several weeks actually. It's been going up here, pulling back constructively, and here you can see here there's sort of like a cup and handle type pattern, that was starting to take place here. So you can see here that this zone right here was resistance, that 420 zone, and you can see kind of like a cup and handle here type pattern starting to develop here. So you can see here, this is called a cup and handle for those who are not familiar with this formation. You can see here a cup type pattern and with a higher low here creating a handle. And typically when you see this kind of formation, especially if volume it starts to pick up here, on the upside, and you can, it's a pretty good indicator that this stock is going to probably break out here. Obviously the stock is a very, very volatile stock. You can see how it has solid bars here, and you can see here on a candle like this, you can see how it dropped quite a bit here before reversing. So right away, that the stock, it's going to play some tricks on you. So you got to be very careful how you play it. You want to play it, you want to make sure that when you enter a stock that does things like this, where it gaps up, shoots hard and comes back down, and the next day it kind of goes quiet. Next day it wakes up all of a sudden and starts to attack. The following day it does give you a narrow range. Then this next day it just falls apart and then comes back together again. These kind of stocks, you got to be very careful how you play them. I mean, a lot of stocks will do that. But especially these kind of like on the thinner side, or these biotech names, for example, you got to be very, very careful. This is a biotech stock, so there's always going to be a lot of volatility in these names. But basically, here's what attracted to me in the stock today. Basically, the stock in a down market today was a down day in the market. So right away, when the stock market opens down, like I think like the Dow gap down like maybe 50 points or so, and it sold off, around 60, 65 points. So right away you're dealing with a weak market. So right away you always want to be careful with long positions. You don't want to be aggressive, in a down market, with long positions. You want to be very, very careful. You don't want to be a sloppy trader and willing to take any trade he can see. You just keep your composure and stay disciplined. Um, so basically, but the stock today, what I liked about it is on the daily chart, it was starting to form like these little candles here, and you can see how here that 455 area was starting to be like a little issue for the stock here. So you can see here there was almost like a little bull flag type pattern starting to emerge here. And this today was a down day in the market, but the stock, it gapped up a little bit, sold off here. Here's a 10-minute chart of the stock, and I'll show you a much better example here of what I'm talking about. Um, you can see here how the stock basically opened today on February 15th, and you can see what happened here, guys. This is why you never want to put like a limit order right on the open, because the stock gapped up. If you had a limit order at 450, you would have been triggered here. You would have been triggered in for an entry. Then the stock, look, it sold off all the way down to 440. So I mean, for 10 cents for a stock like this, that's kind of a big move. It's not a huge move, but it's kind of a big move, enough to shake off many traders and scare them out of their positions. So right away that 450, that right away, as soon as it gapped up over it and it sold off like this, so that 450 now is going to be yet again a zone of resistance. So you can see here on this day here, this is a 10-minute chart, as you can see here. You can see here how at 453 was an area of resistance. The stock could not get above it for a few days. Gap down here, rallied back, and you can see here again, once again, that 455 zone was again an area of resistance. Here, look at this, guys. It got to 450 and then failed. Here, once again, it got to 450 and then failed. So if you had a buy limit here in the pre-market, and you would have, and if at 450 you would have got a fill here, and the stock would have tanked on you, and you probably would have got stopped out or got scared or got shaken out. So you never want to put a buy limit order in the pre-market. That's number one. Never put a buy limit order when the market is bad, when the market is opening weak. You don't want to do that. Because always assume that in a weak market, most stocks are gonna stay weak. Okay, only a handful of stocks are gonna rise above and go green, and these are the stocks you want to pay attention to. But that's a whole different issue. So you can see here once again 452, and the stock tanked. So now on a 10-minute chart that the 455 area, the 460 area, this zone right here, that 455, 460 area, that if the market was to gain any sort of strength, then right away that if the stock can get above 455, 460, and especially if volume starts to become like very, very huge, like if you see volume activity starting to pick up, then that this is a stock you probably want to enter right here. So basically, wait till the open. Wait maybe like 45 minutes, 30 minutes, an hour even, then identify the resistance zone. Where's the resistance zone on a stock like this? I mean, it's shown you several times that 455, was going to be an issue. 455, 457. You can put a buy limit around this area right here. See that? So now you can put the buy limit in, go back to work, and say, hey, okay, you know what? I'm going to put a buy limit in here. I'm going to put a buy limit in this 455 zone right here, 460 zone. Let's say just to be safe, 460. Okay, and then you say, you know what? And then if I do get triggered, I'm gonna put a stop loss underneath this low right here. See that? You have it. So now you have a clear area of support of a you have a clear zone here. You have a support zone. If broken, you definitely want to be out of the stock. At this point, if the stock, you know, goes all the way to 450 and then tanks, you definitely want to be out here. So if you get in at 460, 455, you put in a buy limit here, you go back to work, put in your stop loss right underneath here, and see what happens. If the stock breaks out, keep checking on it, and then they see if if the volume starts to pick up. Volume indeed was picking up, and the stock kept rallying here. And then from there, you gotta manage the trade. You want to raise your stop losses. You want to leave work for a little bit and manage the trade. You gotta do that. You can't just let the trade trigger and then you not watching. You gotta at least be aware of what the stock is doing once you've been triggered into the trade. And right away when you see the volume picking up like this, you have a break over 460. You should be pretty confident now that you have a good trade. This is a trade also that I called also on Twitter. I said that the stock OPK looks very, very angry, and the stock was around that 455 zone right here. So it's just starting to clear, peek its head above this resistance zone. So, many guys in the chat room played it. I did not play it personally, but guys in the chat room played it, and they made quite a good trade out of it. And they kept raising stop losses, and as you can see, the stock really took off. Not every trade is gonna work like this, but this is the kind of mentality you want to approach when you want to do you know a buy limit or buy stop orders. You never want to buy in the pre-market. You never want to set them in the pre-market, and you never want to put buy limit orders in a weak market. And then third of all, you always want to be aware where is the stiff area of resistance. You want to put buy limit orders above it, and then you have to monitor volume after this. If volume starts to pick up, then that you probably have a good trade on your hands, and this could be a good winner. And you can see here on the daily chart how it looks. It was a beautiful breakout, good volume. If you bought it today at the 450, 460 zone, 455, 460 zone, this would be a pretty good swing trade to take into tomorrow as well too. You can see volume closed well. A stock like this will probably gap up in the morning. So just something to watch. And hopefully these tips help you guys. And I promise I'll do more videos in the future. Best of luck tomorrow. Take care.